Welcome back to the data vesting community, where we don't just follow the index, we measure the health of the entire Nigerian stock market. This is our NGX Market Breadth update for the week ending July 24th, 2026. Let's dive into what the Market Breadth dashboard is telling us. Let's begin with this week's market summary. Out of the 142 stocks listed on the Nigerian exchange, 57 stocks advanced, while 38 declined, resulting in an advanced decline differential of plus 19. That's a notable improvement in overall market participation. Looking beneath the surface, 38% of NGX stocks are now trading above their 10-week moving average, up from 27% last week, while 51% are trading above their 30-week moving average, suggesting that more stocks are beginning to establish medium-term uptrends. However, the net new highs reading of -1 tells us leadership is not yet fully restored. While more stocks are participating in the bounce, the market is still not seeing a broad expansion of stocks making fresh highs. Most importantly, our market breadth signal has improved from neutral to bullish. This is our first bullish breadth reading since the recent market pullback. Supporting this move, our volume thrust indicator remains strong bullish, telling us that buying pressure continues to be backed by healthy trading volume rather than weak participation alone. Overall, this week's market internals suggest that market participation is broadening and institutional buying pressure remains supportive. At data vesting, one of the most important indicators we monitor is the advanced decline line for a short AD line. Think of it as the market's heartbeat. Unlike the NGX All-Share Index, which can be heavily influenced by a handful of large-cap stocks, the 80 line tells us whether the majority of stocks are actually moving higher. This week, the 80 line rose by 19 points, confirming that market participation continues to broaden. A rising 80 line tells us the rally is becoming healthier because more stocks are contributing to the advance, not just the market heavyweights. But participation alone isn't enough. We also want to know whether buying is backed by real money. That's where the 80 volume line comes in. This indicator measures whether advancing stocks are attracting more trading volume than declining stocks. This week, the 80 volume line climbed over 501 billion, its highest reading in recent weeks. That tells us institutions are not only buying more stocks, they're doing so with increasing conviction. Finally, we combine several breadth indicators into our proprietary market health score. Instead of focusing on a single metric, this score summarizes the overall condition of the market. Last week, the market was classified as neutral. This week, it has improved to a healthy bull market. While no indicator is perfect, this gives us greater confidence that market conditions are improving beneath the surface. The biggest takeaway this week is that we recorded our first bullish market breadth signal since the recent market pullback. Even more importantly, that bullish breadth signal is supported by a strong bullish volume thrust, along with rising AD and AD volume lines. These are exactly the types of confirmations we like to see before becoming more constructive on the market. However, caution is still warranted. One bullish week doesn't establish a new trend. What matters now is whether this improvement can be sustained over the coming weeks. That's why market internals matter. They help us distinguish between a temporary bounce and the beginning of a healthier market. If you'd like to stay ahead of the crowd by following what the market is doing beneath the surface, not just where the index closes, be sure to subscribe and join us again next week. We'll be back with another NGX Market Breadth update to see whether this new bullish signal holds or fades. Remember, this is data vesting, trading with science, not emotions.